Adobe just released Q1 2025 results, and the stock is already down by over 13%. This is a continuation from a trend that began by the end of 2023. In fact, today the share price is quite close to the lower trend line that we see on the chart, and I believe that this is going to continue to sell off up until the mid 200s. In this video, I'm going to present the different arguments why I believe the stock might continue its downward trend. I will review the latest earnings call transcript, as well as I will do a fundamental analysis on the company. So let's start with the earnings call. There are different points that I want to discuss. In fact, I wanted to cover this one first, which is guidance. It's pretty much on the headlines right now. Many people they believe that the guidance was disappointing, not because it was downgraded. Actually, many investors believed that due to the macroeconomic headwinds in the US, the company will actually report a guidance that will be below the previous expectations from the last quarter, and that was not the case. So management actually reaffirmed the revenue and the EPS guidance for fiscal year 2025. It was slightly below what the market was expecting. However, if we look at the revisions in both EPS and revenue, in this case, in this chart is the revenue revision trend, yeah, and the orange line is the fiscal second quarter 2025. So you can see that there were no revisions. So the expectation is still the same value as before the earnings. If we go to the EPS, here we can see a decline from 5 in the second quarter down to 4.97. It's not a major decline, but yeah, it's something to consider. And when we look at the annual figures, these are, I believe, the important ones. You can see in orange, this is for fiscal 2025. You can see that the value is pretty much constant. So analysts, they haven't revised downward their expectation after the earnings report. And if we look at revenue, it's the same. So November 2025, it's pretty much the same as it was over the last month, with 0% change in the trend. So guidance was not the best. However, I believe in this stage, any news, it doesn't matter, stock sell off, because the overall market, you probably already know. You can check my previous video actually to better understand why the overall US equities are selling off right now. And I believe any announcement could lead to this outcome. In any case, let's go now through the earnings call transcript. So what we have here, I will go into the results in just a moment, but I thought to give an overview on the transcript. So the first point was actually the revenue for the creative and marketing professional group. We have 3.92 billion that was reported in the last quarter. So this is a 10% year-over-year growth. Business and professionals, this is lower than the previous segment. So this is just 1.53 billion, and this was up by 15%. So here I can see already a concern that a bigger segment, which is the creative and marketing professional group, is growing at a pace that is slower than the business and professional consumer group, which again I say smaller because the revenue was smaller. And I believe this was Q1. If I have a look, I don't think this was the revenue for the entire year. No, this was definitely Q1. So this is already one hint towards a slower pace in growth. And you can see here the two main segments, digital media and digital experience. So digital media was up by 10% year over year in the past quarter. And this is less than in the previous quarters. You can see that the last time the growth was around this value was in fiscal quarter 2023. And if we look at the digital experience, so digital experience, this is more targeted towards businesses and enterprises. Digital media, it's more towards consumers, creators. I believe the main platform in digital media is the Adobe Creative Cloud. So yeah, it's something to consider there. And for digital experience, the growth was 9%, which was slightly higher than what we have seen in the summer of last year. So this is already a point to take into account, because it is believed now that with consumer confidence decreasing, revenue will go down. So people are paying very close attention to the different segments of the companies. So let's continue to the earnings call transcript. This was one of the questions actually by an analyst. So he was actually quoting the turbulence in markets with trade wars, etc. He was asking, how do you feel your customer base is going to behave? So the answer was not really the best, because what I can see here is that customers, yes, so they believe that they are jointly trying to understand what happens in the economy, but the tariffs, etc., don't really impact Adobe. I agree that they don't impact Adobe as per se, because they don't import anything from outside the United States. However, their customers, they do. So directly, Adobe is not impacted, but indirectly they might be. And when it comes to figures, which is the most important thing, one of the most important things I look for in the answers is to see actual values, is to see either high conviction or quantitative values to answer these questions. And I haven't seen much aside from, yeah, customers are trying to understand what happens. Okay, that's not telling me much. Moving on to the next question, we have another analyst is asking for more details on why they changed the categorization of revenue. So they removed the historical document cloud and the creative cloud. Essentially, they aggregated everything in a category. Generally, I don't like that because it reduces the transparency. I always like to see a very detailed breakdown of what's going on. And the reply was more in the lights of, it's meant to just draw a highlight to our strategy and how we're executing against the strategy. In other words, it's again one of these answers that leads nowhere, in my view. I wanted to see the actual reason on why this is, improving the transparency on the company. So something to consider. I don't think it's overly concerning this point. However, the more granular view I can have on a business, the better, because I can understand what's going on. Next point we have, this is it was actually one of the statements at the very beginning of the call. This was in the prepared remarks. I believe it was the CEO. So the quote was saying that generative AI is infused across the breadth of products and is impacting billions of annual recurring revenue. Yeah, billions. Yeah, is the figure here. Now, of course, the analysts they asked on this topic. So one of the questions was, the AI book of business for 2025 is in the low single % of the total revenue for the year. In other words, you will see in a moment, because here he replied with the actual figures. So 125 million already confirmed for fiscal Q1 2025. They expect to double this revenue by the end of the year. So that will be 250 million. Now, the thing is, if we go back to the earnings, the company expects about 23.5 billion. So if we actually do the math, 250 approximately, and we divide that by 23.51, So that's about 1% of total revenue comes from AI related products. So that's quite low, and it's not even close to what the CEO was saying there, that it's influencing billions. The picture there was overly positive, and what I see in the reply is that it's a bit more moderate. So yeah, the analyst, he wanted to know if he can provide more details on that, and how long will it take to arrive at those values, what is required, or just to work them through the AI journey. The reply, again, is the only figure I'm seeing here is the 125 from fiscal Q1 this year, and I really don't see a tangible path on how they will actually reach meaningful revenue, aside from providing an overview on how they reached that 125 million. So moving on to the next ones, we have another analyst. So this is in the spirit. If you look at the 125 million and you think about the segmentation between the three different apps, so that's Assistant, Firefly, and GenStudio, he was wondering if there are any triangulation. So what is the breakdown, for AI between these three categories? Essentially, he wanted to know which one is going to be driving that revenue. And yeah, he did mention some of the vague timelines. So this includes, Firefly service has been around for about 4 quarters, GenStudio late Q4, and says that composition is going to sort of like be based on the tenure of these products in the market. Again, this is not telling me much on the allocation for these three applications, on which of these three is going to be driving that AI revenue. Yeah, the outlook, as I said, in the next 9 months, they plan to double the 125. So yeah, it's not really exciting because that's 1% of fiscal 2025 revenue. Now, moving on. Again, this was one of the statements. The year is off to a good start, assuming current macroeconomic conditions, and they reaffirmed full year guidance for fiscal 25. This is great news, actually, because many people were concerned that the macroeconomic factors would lead to a downward revision. You can imagine why, because the company is exposed to both consumers and businesses. So in the lights of higher inflation, consumers have a discretionary budget that is usually squeezed, particularly creatives. Some of them, of course, they are successful and they have no issues, but most of them, they aren't. And the first thing they're going to cut is on their subscriptions. So that's something that people were considering, as well as businesses, because if revenues are, or growth is in a decline, the first thing they're going to do is cost cutting, and cost cutting usually involves tools or services that are not priority, and yeah, a tool like Adobe could be between those, or at least some of the products that they offer. Not all of them. Maybe if the firm, they really need Adobe Express, for example, they're not going to cut on that, but they're going to be more careful with the number of licenses they hire, or the number of licenses they buy for the company. Good. So this is the overall guidance. This is for fiscal year 2025. I think that Seeking Alpha, they summarized this in a very kill hero way on this table. I really like how accurate and not how accurate, but how visual they are when they present the earnings data. So yeah, the issue here is that the market was expecting, well, I to be honest, I don't see an issue. The market was actually expecting a guidance that would be below the previous target, and they actually presented the guidance that was in line. So it's difficult to understand why the sell-off happened. I believe it's more related to the broader economy, where any news is bad news. So that's why stocks are selling off right now. And yeah, I believe that you will see in a moment that there might be a risk for a revision in the second quarter, and that revision could be tempered towards the downside. So next, more questions. So we have, yeah, this was actually related to advertising activity, consumer spending trends in the wake of some very choppy results from multiple airlines. As a matter of fact, American Airlines, just have a look at the stock. I mean, this is quite unusual. This is not really, yeah, you don't usually often see this kind of declines day after day. And yeah, I was actually invested here just after earnings with puts, and yeah, the position is up by 70%. So not bad, not bad. Anyways, let's go back. Where are we? Here. Yeah. So essentially, the airlines, they're having some choppy results in the last several days, and other retailers, they have the same performance. So he's asking, what is giving, resilience to reaffirm the guidance, and in the lights that other businesses are struggling or are showing signs that they're struggling. So the answer is, again, really shallow. He's just saying that we just believe that digital is going to continue to be a fundamental part of the economy, and the importance is going to continue. But there isn't anything strong in the answer. I don't know. I was expecting to see some, roadmap or a concrete timeline for certain tools or certain initiatives to drive revenue, and the answer was really, I don't know, pretty shallow in my view. Next, let's see what we have. We're trying to attract fast creative professionals. Yeah, so I believe this was another, yeah, what is the conviction on how truly incremental AI can be for the growth? And I believe that they're not defensive on the use of AI, so they actually think that there is some value that they can extract. But it's just that the overall macroeconomic environment is not really the best place right now to look for growth, because I don't think consumers are going to be adopting whichever advancement happens in the field of AI. So moving on, these are the fundamentals. Growth. So this is the year-over-year growth per quarter. Revenue was actually fine. So 10% up year-over-year, pretty much in line with the previous quarters. Gross profit, again, in line. Operating income, I would say it's slightly decreasing, yeah, from March 2024, but it's not a significant jump. Like if it will be from 16 in the previous quarter to 6, that would be concerning, but it's down 3 percentage points. So not something that makes me sweat. And net income, in this case, it's quite a big jump, because what happened in March 2024, well, actually, it was the Figma acquisition. So Adobe actually abandoned the acquisition, and they had to pay about 1 billion to Figma, because they terminated. So you can see here the statement, the reverse termination fee of 1 billion in cash. So that was the cost of breaking the acquisition. So yeah, net income was fine as well. If you look at the cash flow statement, so again, these are quarterly values, and I'm going to leave it in absolute so we can see the actual figures. Cash from operations is 2.4 billion. Again, you can see the trend. It's not bad. I mean, if we look at year over year, let's just have a look at that. Yeah, it's a significant improvement from Q1 24. And actually, when I look at cash flow, I like to use TradingView, but of course they don't have the figures yet. That's fine. So overall, I believe the fundamentals are fine, but it's just the macroeconomic environment that makes me a bit concerned. So I think I have covered pretty much everything that I wanted to cover. The biggest concern in the chart is that the price, broke this support level, or however you want to call it, that line, and that's usually not positive. So let me just put it back again. I don't know, something like this. Who knows? I'm not very good at drawing lines on a chart. So can the price pull back? Probably yes. So that's the reason why I wouldn't short the company. It doesn't make any sense to short it right now. If you look at the RSI, it's in oversold territory. It doesn't look particularly well, but there is a chance for a pullback for sure. So yeah, I'll keep an eye on the fiscal Q2 for this year. And the idea is to understand whether guidance is going to be the same. If guidance is maintained or even increased, then it will be the time to buy deep out of the money calls. That's what I believe. However, if guidance comes at let's say at a slightly lower values than initially expected. So again, this is the expectation. I think I had it here. So any values below these ones are going to lead to a sell-off. And considering the inflation projections for this year, I believe that could be the case. So yeah, something to consider. And yeah, I believe the risk will be too high. In any case, this is just my opinion. I'm not advising anyone to do anything. So just a few thoughts. And yeah, that's my analysis for Adobe. Thank you, and I hope to see you in the next one.